earnings now. Man Infra Constructions, that's the stock on our radar. It was a decent operational performance. 9 months collections, however, came in at 821 crore rupees, and this compares with the level that they saw earlier, and it is lower than around 1400 crore rupees that was seen earlier by the company. We have the management, Manan Shah, Managing Director at the company, joining us now. Manan, good afternoon. Thank you so much for joining us. Well, on a quarter-on-quarter basis, sales and collections look good, but if I look at the 9-month numbers, your sales have come in at 353 crore rupees, which compares with 992 crore rupees that you did in FY23. Same is the case with collections as well. They're much lower than what you saw in FY23. Will you be able to exceed last year's numbers? What is the growth looking like? What has the demand been in January so far?
Good afternoon. So, if when you're comparing with last year, the first thing is there were a couple of launches which were due last year. Second thing is the collection, what you're talking about. There are a lot of projects which were completed on the worst of it completed 2 years back. So the revenue potential started getting recognized in the quarters in the last financial year. This year, we've just started our new launches. In fact, we've done 2 new launches of 2 ultra-luxurious projects. One is in Taradev, one is in Ghatkopar. And the sales momentum and all is absolutely phenomenal for us. We've done more than 333 crores of sales already in the Ghatkopar project. We are yet to conclude the Taradev project, which is going to be done in the end of March this year. So the numbers looks promising, of course. What you're talking about in terms of the top line, I would rather say we focus on the bottom line because the profitability is shot up in the 9 months compared to last year. And because a lot of our projects, as we had mentioned in the earlier times also, is DM. So the revenue does not come onto our books. But
no, Manan, I was talking about the operational update. I was not talking about the P&L. I was talking about your sales on a quarterly basis and the collections on a quarterly basis. I understand it's lumpy accounting, so revenues really won't matter. And that's why I was asking you the outlook for the rest of the quarter and the next financial year.
So the rest of the quarter also, this quarter is going to be more stabilized. But in the next financial first quarter, we are expecting few more launches. So that's where you will see a bump in the sales going up.
Okay, Manan, so FY24, can you give us a bit of a sense as to where you will end in terms of collections? And FY25, what is your target? How many launches do you have planned for FY25? And what kind of collections are you looking at?
So we've done more than 800 crores of collections up till now in the FY24. And we see it crossing about 1,000 basically this financial year. In the next year, we've got a couple of launches due. Plus, we've acquired a few more projects which are on the verge of final due diligence and negotiations. So that we are going to be announcing soon. So next year, you would be able to see at least 3 new launches over and above the launches that we've already done in this financial year.
Okay. So what would the yearly run rate look like? Since you're talking about FY23 being a year where a lot of launches were pushed ahead because of COVID, what will the normal run rate look like on a yearly basis going forward, considering all the acquisitions and everything?
We're seeing about 1,500 crores.
Above 1,500 crore rupees. Okay.
Manan, another question. So, you are present in a lot of redevelopment projects. So, give us a sense of, the margin differential between a brownfield and a redevelopment project. So, does this require more investment upfront? And what is the kind of mix that you have in the real estate space versus, new projects coming up and the redevelopment projects?
So, MICL Group has always opted for... We do not intend to buy land upfront. So definitely the cash flow requirement in the initial stages is substantially low when you comparatively to buying a land. The strategy has always been this, so that the money whichever is infused in the project goes in starting the project, in fact, and where we can start the project much more faster, keeping the cash flows infusion much more lower. In terms of redevelopment projects, yes, we have a larger portfolio of our books contributing from the redevelopment side of it, and we've been focusing from the mid-housing segment to the ultra-luxury in that, where we've just acquired something at Pali Hill as well, which we had announced recently. So the strategy would always be to be a little more asset-light, focus on multiple projects, and have the cash flow infusion to kick off the project rather than getting the money outside the project.
Okay, so does that mean better margins, better return on capital employed if you go more for redevelopment versus, outright buying of land and developing there? And what kind of capex would you require going forward for all the acquisitions or the projects in pipeline that you have?
See, in terms of margins, we've always focused on bare minimum of 25% and beyond, and we've always been stabilized on achieving these kind of margins. So that's where we have secured all the projects in redevelopment space. It's not directly comparable to a land buying project because the psyche over there is different. It's much more longer tenure, plus the complications in buying the land, clearing it, and moving forward is slightly more time-consuming process, is what I would say. And in terms of the capex that's required, all the projects that we need to acquire, we already have the necessary cash flows. We've been highly liquid, more than 500 crores at a group level. In fact, we've just done a round of preferential share allocation, which was successfully done, where we've done around 543 crores in terms of the issue size. And the 25% money has already come into our books, which was the first tranche of it. And we don't require any further capital, and we've been historically until date debt-free. So we will be maintaining that status in the near future as well.
Well, thank you so much for that, Manan, and thank you so much for joining us here. Let's now slip into a short break. Ankit Mehta, the CEO of IdeaForge Technology, joins us to discuss the company's Q3 earnings and a lot more, so stay tuned.